Hello friends, welcome back to TT Forex. Marubozu. Who said I couldn't speak Japanese? Yes, that's Japanese, baby. Marubozu. Do you know what that means? It means shaven, smooth, shaven. There is nothing shaven. Well, yeah, that's what they say. I have no clue whatsoever if that's true, but what I know is like there is a candlestick pattern called marubozu in the forex market. So that's exactly what we're going to look at. At least that is what I'm sure about. Well, I don't know the meaning of the name. They say, yeah, it means shaven. Yes, whatever. I don't care. What I really care about is this: the characteristics of a marubozu candle. They are usually long candles with no wicks at all. From both ends there is no wick. If ever you see a long candle with a small wick, that's not marubozu, it's something else. If it doesn't have any wick, that's a marubozu. So in a bullish marubozu, in which the open will be lower than the close, that's a bullish marubozu. That open must be equal to the low of the candle, and that high, the high must be equal to the close. So in other words, the open is the close, the open is the low of the candle, and the close is the high of the candle. The opposite is true for a marubozu, which is bearish in nature. The open is equals to the high, and the close is equals to the low of the candle. That's self-explanatory. So in other words, what you're going to see on a marubozu candlestick is something that resembles this box. This is where the market can be a fine artist. It will print a candle that is perfectly fitting the definition of a marubozu in your textbook. This is a marubozu candle. As you can see, it doesn't have any wicks. The open is equals to the low, the close is equals to the high. In other words, the open price and the low of the candle is equals to the same. Now, what's the story behind this candlestick? Like what we always do, we are going to go down deeper into the candlestick, strip it, see it naked. That's what we are going to do in here. This box here is the same candlestick, of which if this was a daily candle, we are looking at this here from here to there as 1 day. This is the time period. This is 1 day, and we are going to see what really happened during this day in order for this candlestick to be formed at the end of the day. That's what we do in here at TT Forex. We strip the candles to be naked. Now, with a marubozu candle, nothing much happens actually, except for the fact that it was a one-way street. It's going up there. That's a one-way street from a glance of this candle. However, when you go down to the lower time frame, or you sit in front of a computer and watching the charts as they move in real time, you are not going to see something that resembles this line. No ways, that's impossible. Okay, well, it's possible. Anything is possible with the forex market. Nothing is impossible, but that is highly unlikely for a candle just to open and move like a series of candles, 24 candles, if it is an hourly chart, like going as high as possible without any retracement. I mean, I don't know what the probability of that happening is, but definitely I do not think that can ever happen. Yeah, well, it might happen, yes. Now we are going to look at the possible ways in which this marubozu candlestick might have been formed. So it might be a perfect scenario of a normal wave pattern like the Elliott wave and whatsoever. I do not care about calling the names, but it might as well be a wave going up, like a series of higher highs and higher lows going up until the market closes here. However, the market might as well decide to mess with your head. Might as well start by range for the rest of the day, and will be like, no, well, man, this is a ranging market, so I'm not taking any trades, and you will be right. And then at the end of the session, just get one candle that will just shift the whole dynamic of the market and pushes higher and close at extremes of the day. Or you might have a candle that shoots up in the beginning of the day, and then the market just ranges for the entire session until it closes here. That's another possible move. Or maybe it went up, came back down, like having a ranging session until it comes to close here. Or maybe it was this whole candle was just a channel in which the market was just ranging the whole day, ranging, and if you were a range trader, you could have just been buying the dips and what do they call it? It's like buying the lows of the channel and selling the highs of the channel. Yeah, something of that nature. Yeah, so you could have like traded the whole day, selling, buying, selling, buying, selling, buying, selling, and buying, selling until the end of the day when the market closes, and then that's where you would have closed your laptop as well, closed your trades for the day, and called it a day. So that's how such candlesticks are formed. I'm not saying that these are the only possible ways. It might as well like spend the whole day going forth and back if that's possible, but at the end of the day it remembered that its intention was to close up here. So that's exactly what happens during the formation of this. Okay, not exactly, because this here, I'm just messing with you. You will never find such in the forex market. So this is a bullish marubozu. The opposite is true for the bearish marubozu, which I'm going to show you right now. It's just a just you flip the bullish one. The opposite is true. Like you see here is a series of higher lows and lower lows. What am I saying? It's a series of lower highs. It's a series of lower highs and lower lows. Yes, that's perfect. That's perfect. So this is a typical wave to the downside. The market is pushing down, and it might have as well ranged for the entire session only to close down lower here. So those are the possible ways in which the market might have printed this candle for the day. So I hope this was informative to you guys, and I would really like to thank you for watching. Please remember to subscribe, hit the notification bell, like and dislike. Thank you so much. Take care.